Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at technical charts and try to understand what happened in the market during the previous week and then plan for a better trade for the upcoming week starting tomorrow, Jan 20th, Monday 2024. So let's get into the weekly view. QQ. You can see that it's an indecisive close and prices again in the channel, two trend lines between that. That's on the weekly of Nifty, and right side we have multiple panel channels. You can see there, reaching one of those and then heading towards bottom of another one. It's a daily of Nifty, Banknifty. Also, weekly continue to be in some kind of ascending belt itself, although the earlier breach of a narrower trend line had happened, adjusted slightly. Yeah, so that's a weekly of the Banknifty, and daily also is within the panel channel, almost in the bottom of that channel. So basically we had a week of further fall that happened, and recovery attempts also happened. That way it went volatile and closed finally indecisive and negative 1%, nearly 221, and it's below the 200 exponential moving average, so definitely bearish. So 12.3 is the extension of the correction that is happening in Nifty now. Remember, we had a 70% good rally since June 22. Banking index sells this week and also was very volatile, but it managed to close flattish negative 0.37, only lost 80 points down, but it extended the correction to 12.7 more than the Nifty. Right, so banks were tend to fall sharper most of the times when the market turns bearish. So that's the story. And here we see the weekly charts of the Nifty where the indecisive doji candle. The doji indecisiveness, the market is deciding whether to further fall correct or is it time to consolidate. That's indecisiveness. Banknifty also has a small body. It's also kind of indecisive, and the wick size of the candle indicates the volatility that happened. Around 5 days of analysis, if you see, markets fell sharp. It tried to recover but failed to sustain. Inverted V shape, not fully inverted, some more space to make it towards the previous swing lows, but almost a half inverted V shape. So that way it was very volatile. That's what you see here. And both the bands are expanding on downside. Make note of that. Don't ignore this. Don't try to expect a move when the market is expanding on downside and the Bollinger Bands. Never do that. Right? That's a daily on the Nifty left side. Bollinger Bands expanding, indicating more downfall. So that's the story. You have indecisive candles. You have hammers on the daily. Right? Market basically has made new swing lows and the correction extended to 12 plus. And Bollinger Band clearly indicating negativeness. Let's move ahead. Momentum is also kind of sideways falling in the gate of weekly. The daily charts it's bearish and it's persisting below the RSI momentum 40, which is extremely bearish. So negative momentum for sure in the short term, and sideways momentum inside. And technically ADX is DMI negative, neutralizing the bearish strength. So there is strength and sideways falling momentum overall in the medium term charts is what you see. The India week, the volatility, if you're on green indicator, actually went very volatile. The VIX itself went volatile. VIX is used to measure the volatility. That itself went very volatile, 6 to 9% plus 6 and downside 9%. That happened when the inverted V shape happened. Finally, it settled flattish, almost 2% up, 15.75. So the medium volatility, you want to be careful. Open interest for the January 23rd Nifty weekly expiry and the January 3rd Banknifty week monthly expiry is indicating the PZR is still bearish below 1, definitely, and futures are showing short build up. We can understand the levels to place the support and resistance from the open interest as well as from the charts. First, we'll see how the open interest is saying. 22,700 and 22,500 is where the highest writing is seen. That's where the support is seen basically. And 23,500 and 23,700 is where the highest resistance is seen. That's highest call writing is seen there. Similarly, Banknifty 48,000 and 47,000 are the highest supports, and 50,000 and 49,000 is where the second half, where the highest call writing or resistances are seen, right? And PCR is bearish and futures are high, bell levels also bearish. Now these levels that you see here are Fibonacci's, based on Fibonacci, retracement levels, exponential moving averages, rounding numbers, previous swing lows, previous resistances, and all this, right? That's what is used to understand the level from the charts. So the first immediate resistance could be coming close to the 200 moving average of 23,600, then 23,670, then 23,750, and with Fibonacci 50, and then 23,893, 100 exponential moving average, 24,098 was for the 100, 23,936 for the 50 exponential moving average. So many supports can be seen at the 23,000, then 22,794, and then 22,526, and then 21,825. So that's what it's derived. You can see that it has slipped down one parallel channel, and then another parallel channel has a lot of space to go till the 22,000. Make a note of that. Similarly, I have a parallel channel on the Banknifty. First resistances will be at the 20, 200 exponential moving average, 50, then 100 exponential moving averages. That would mean it's at 50,000 major resistance first, and 50,261, then 51,000, and 51,131, 51,176 likewise resistance and downside. 47,876 were the major previous swing lows, which is the Fibonacci 78 and the previous swing low as well. After that, 46,947, 46,574, and 46,77. That's where, if this parallel channel breaches, then it can go to the previous swing lows and that hit there. So based on these two charts is what these levels, make a note of that, right? Moving ahead, if you try to understand the different sectoral indices, we can see that all the indices went down, especially the IT index went heavily down, nearly 6% fall. Only the metal index had moved up 3%. This was all down about 1%, pharma 1.4, FMCG 2.3, reacted 2.5%, and IT sector heavy fall of nearly 6%. So one of them are ready for taking long questions. You can analyze the charts here. You can clearly see that market is almost all the indices have fallen to the sideways momentum or bearish momentum, and then trying to find supports there, and is what you can see with respect to the momentum. Now IT was holding the market, defending the markets, but it had a big fall ahead of Trump coming into power next week. And you can see that there's a climb back that has happened in the metal. Metal did show some recovery attempt, and the auto is also consolidating midway in that parallel channel, and correction has already happened in the pharma, and then it's also trying to find support. And FMCG also correction towards the parallel channel has happened, and it's trying to find support, falling to the bearish and then climb back. The LT index also trying to find support. It's midway in the correction, right? So that's how it is. And if you try to understand the heavyweight stocks that contribute maximum to the index, the critic stocks or the 7 big stocks that contribute maximum. HDFC Bank comes first, and it is still showing red for the falling, but not at going to the bear zones at the moment. Trend definitely has crossed over the bear zones, right? So it's a parallel channel that you're seeing there. It hit a new all-time high, did not sustain, fall down. Lions was in trouble, climbed back, following the results in the sideways momentum. Now momentum is about to cross over to the bull zones once again. So that probably has made a bottom at 1,200 levels. As the brand will still continue the collection sideways and falling is what you see there. The IT stocks hit bad, and for the LTCs you can see that it's in sideways, falling once again. Kodak Brand as usual sideways. LTC is also struggling sideways. So everything is sideways. All the heavyweight stocks sideways. Only thing is Reliance has climbed back to the sideways from the bear zone. Is only hop. If you look at the broader markets, mid cap and small cap also attempted recovery after hitting the bottom of the channel. So it's very positive. It is not still turned in the medium term. Negative zones, broader markets, and mid cap is where the buying is happening right now. Moving on, let's try to understand how the institutional participation is happening. So 25,000 crores, 200 to this 25,000 crores of selling FIs are selling it heavily. They are buying equally heavily. And that's a big bull bear fight that is happening in the market between the FIs. So FIs continue to sell big is a concern, but that's not enough. A lot of billions of dollars of money has gone outside the country in the last 1 year or more. right? So until that comes back, we would have the markets, depending only on the mutual fund or the joint money. Looking at global markets, currencies, the commodities and all, we see that the dollar is slightly moved down. Actually, it's negative for side. So the dollar has cooled off after breaking out like anything, right? And still is bullish. So USD another 0.5% up. So it's 86.55 historic higher levels, and rupee is historic weak levels. That's the concern. Crude oil continue to move up, but there's a doji gravestone at the top, indicating that probably the move further is arrested. Gold is breaking out once again, green candle, and very close to the all-time high. When the market is falling, gold usually moves up. Gold is in bullish rising momentum. What is the hedge instrument? Right, let's move and see how the global markets are doing. Dow Jones recovery attempt, sideways rising up, and trying to get into the bull zones, back to the all-time highs. Even the Nasdaq all showing solid recovery of 2 to 3%. In fact, Dow Jones moved 3.7% up. It's in green, and I marked it with the green with the red color. Sorry about that. So that's the story. News markets are giving hope, and crude oil probably mirrors, and gold is as usual spiking when the equity is down. And the trouble is the rupee is weakening day by day, with some hang not doing much for some fundamental reasons. So that's something that we have to keep in mind. Markets, there's some hope with respect to the crude oil and the US markets, not the market. So we have to keep a close watch there, especially when the new governance is coming in picture next week. Now, actually, those two stock picks, Bajaj Auto on the short side and Adul Limited also on the short side. The reason is the momentum is in bearish zones, trend is also in the bearish zones, decent bearish volume also is there. First one is 1:2 in the case of Bajaj Auto, and 1:1.5 in the case of Atul. So head and shoulder breakdown could potentially work out. Parallel channel has a lot of space down, could also potentially work down. Right now the trend is bearish, so again these are two short calls. These are not recommendations, these are just for educational purpose to understand the charts. Right? To take it or not depends entirely on your risk appetite, your understanding, your own conviction, and your own view. This is my view, this is how I read charts. I have a reason for that. I have explained it. If it doesn't work, then I lose if I take the positions. It doesn't mean that you have to take it. It's just recommendation, just educational purpose and not recommendation. Keep that in mind. Another one, FNO. Next level is a call ratio spread, where we sell OTM double, for OTM double, and OTM we buy. So how much over we are buying, double of that we sell. So it's a call ratio spread, and this the 24,000 as long as it's below that, you will make a loss even if the market falls. So it's a not completely risk defined. If 24,000 is breached, immediately you have to get out. No adjustments, nothing. Right. So this is a call ratio spread weekly. FNO strategy for Nifty next week. Let's just try to wrap it up. So it's pretty much clear. It attempted to recover, it didn't work out. Got well volatile and finally it was negative. FIs continue to sell. Correction extended to 12.3. Zone, right? So the correction is 12.3 and 12.7 as of now. So extension of the correction, bearishness, and but we had a fabulous rally. This correction is okay as long as it doesn't come down below 20%. So if you try to bucket with different parameters, you can see that those very few things are in favor. First thing is its momentum is still sideways, we're not bearish yet. Keep that in mind. Once it is bear, we can worry. If guys are back to green, channel quickly, and items in bears bucket is still not. Otherwise, continue to sell. Why futures is bearish, PCR on open interest options is bearish. Candlesticks are bearish. Price action is lower low, lower high bearish. Bollinger Bands are bearish, expanding downside. Sectoral indices are sideways and falling. Medium term, the momentum in the indices have on the medium term also showing sideways, falling, and about to breach the 40 RSI into the bearish zones. And for the trend indicator, it's showing bearishness. So below 200 itself is bearish. Lens is recovered. And that's a mistake we have to correct that. But otherwise, if you see all heavyweight stocks are in trouble, except small recovery that happens for the lens, but still they are all sideways. So one thing you would always keep in mind is that technical charts analysis, go for a toss when there are major events that happens. Right? Major events negate the technical study. But then why do we need that? We need it to identify the probabilities of supports and resistance when there are no events. Basically, that's all it does. So always keep that in mind when you're taking the risk. So there are some views that if in policies and all that can create volatility in the market next week. Keep that in mind. So I have tight stop losses. Range is 22 and 24,000 for next week. Nifty 46 and 52,000 for the Banknifty. So as long as 26,000 and 54,000 is not negated, you continue to be either bearish or sideways. Right now it's bearish. Keep that in mind. Always you can have rental income from option strategies. Check out the playlist for that. Hedging can be used with options to make money. Rental income, call ratio splits and cash secret puts and all that is explained in the playlist. Check out that. So that's all I have. Always hedge your portfolio, hedge your positions. That's the only thing in our hat, right? Risk management is the only thing that traders have to understand. Thanks for watching. That's all I have. If you like, subscribe and hit the like button if you like, and put in your feedback, comments, etc. and share to next. I'm also active on Twitter on X platform. Very often I put in charts, so if you want to subscribe that too, so you can do. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.